Good morning, all. Camelback Trading 2724 coming to you this Monday morning, June 15th, halfway through the month. We're looking at the last 2 days of the SPY ETF market profile here on Window Trader. And as you can see, 2-day balance, the daily is down, and we're looking to gap possibly lower on the weekly. Before we get to what's going on, I want to say we had an excellent webinar Saturday morning. It was about an hour and a half. We had good participation again. I want to thank everybody who attended. A lot of members from my room, plus some from Twitter and my YouTube followers. I thank you very much. If you do want a copy of it for people who could not attend, it's $10 for members, $20 for non-members. You hit me up in the comment section here on YouTube or ask me in Twitter. I'll tell you where to send the payments, and I'll send you a copy of the video. St. Jude Hospital also thanks you. Okay, so a lot of times we say what didn't happen in the market is just as important as what did. Well, we did have a chance for an outside week down, and the market rallied pretty good on Friday, as you can see. So we did not get the outside week down. However, where we did rally, right, we still had the trend day down from 2 days in a row, right? Trend day on Friday, trend day on Thursday. And more importantly, we left a tremendous price void, I said, to the downside. My first destination was Friday's low. Well, the fact now that the market doesn't like what it sees, it has to go seek its first destination. That's Friday's low. Attempting with just over an hour to go to gap lower. It's not a big gap right now, but we still have an hour. So let's go over destinations and a game plan. So for the upside, if we do gap lower, we're going to use Friday's low on both sides. It would be 298.60. Then above that, we have the pre-market high as of now of 299.56. And then we get into the trend day from Friday. Single print started 305.90, get filled to 306.06. Second set, 306.52, get filled to 307.06, and then Friday's high of 309.08. For the downside, if we do not gap lower, we have Friday's low of 298.60. Now, below that, things start getting dicey again for the bulls. We start getting to some very, very visual points. The next destination would be another weekly low of 296.87, and then filling a gap at 295.63. That's a 124-point gap from May 26th, and inside of that gap is the pre-market low of 295.89. If you fill that gap, you pretty much have another big price void. You have 295.45 price probe from May 22nd, 294.25 afternoon pullback low from May 22nd, 293.22 daily low, and then the huge reference point, another weekly low, 291.95, and then the huge gap that gets filled at 286.33, a 562-point gap from May 18th. So that's a huge gap. To the downside, we have two huge ones to the upside, including the one from Thursday and the one back in February. And I mean huge, right? They're 500 and 600 points. These are unusual gaps. So what is the game plan for this morning? Now, bunch of things. We have a lot going on this week. Powell's talking a bunch of times this week. We have an expiration, a quadruple expiration on Friday, where the SPY will disconnect from the ES generally. And again, I don't look at certain days like, Tuesdays are up, Fridays are down, whatnot. But the same with this. But people always look at this, that expiration weeks, a lot of times the market is up. Remains to be seen. The bottom line is we have to trade what's in front of us. If we gap lower, Friday's low is 298.60. Right now I'm trading at 297.80. That's a very, very good risk-reward gap trade. That's where gap rules apply to me. If we open, don't fill it right away, that's a trade to take, because on the downside, you have pretty much a void down to that other weekly low. I would take a put play. I'm out if the gap fills. If the gap gets much bigger in the next hour, especially if we open anywhere near that weekly low and inside the other gap, well, then the gap rules will not apply to me, and I'm going to watch a period form. Context, my friends, incredibly important. As far as a call play, there is not one right now. If we're to open up, fill the gap or not have a gap, and then we start one-time framing up in B period, well, then things will certainly change, because just like there was a price void to the downside, right now, if we were to get back into Friday's range and Thursday's range, there's really nothing back up at all, right? POC was 8 wide, right? Yes, that's something that you're going to go to, but I need 9 wide or more to really lean on it. So I think the important thing would be baby steps for the buyers. First step would be to get back in Friday and Thursday's range. If you get back into M period from Friday, you could easily trade up. This all remains to be seen. You're in my chat room, in my voice room. You're going to be getting these up-to-the-date minute trade ideas right before the opening and throughout the trading day. Charts. Monthly, it's still one-time framing up for 2 months. It's still healthy. Yes, you'd like to get above March's high of 313.84. We still have half a month to do it. Remains to be seen. The only thing that would change my mind on the monthly is if we had to take out the last month's low of 276.37. Right now, one-time framing up. Weekly, firmly in balance, right? A 2-week balance. They had a chance to have an outside week down. They did not do it. Now they're attempting, the bears, to take out the bottom of a balance, right? It's a 2-day balance. You have to go with the break of it. So that's what I will do. If we open below it, I'm going to go with the break of it and sell it. Another important thing, we're back inside this big balance, right? 302.60. Well, you know what the bottom of that balance is. Here we are, January of 18, 287, right? I rounded out. 287, that very, very visual and important level for me. So the bottom line is this. If the bulls are not able to get back into Thursday and Friday's range and start getting accepted into this range, you will eventually see 287. Remember, can't get away from it. Once you do, you won't see it for years, but we'll see how long that takes to get to that level. And then on the daily, right, so the monthly's up, the weekly's balanced, the daily is down. One-time framing down, gap is my main focus. Outside day downturn to be pretty important. Right now, looking to come out of a 2-day balance, even though it's down, to the downside on another gap possibly, below the 200-day moving average. And then here's that one gap, and then here's the huge gap. So again, the bears will take baby steps. They want to get to this weekly low, fill this gap, get accepted into this 5-day balance before they go and attack that huge gap. Very, very, very important levels here. Right? Bulls can't let this get away from them too far. They start getting accepted below this 2-day balance pretty good. Well, again, you could see some acceleration. Good luck trading today. Come check us out at camelbacktrading.org. Have a great day, and we'll recap at 4 p.m.